Hello, guys. I have this chart in 2 tick increments. I'm going to change it into 1 tick increments. So each letter is 1 tick. I always watch it on a 1 tick increment, but I turned it into a 2 tick increment because it's a landscape screen, and I usually use portrait mode because the profile, gets very long, and I prefer to see it on a portrait screen with 1 tick increments. Some people say that when there's a lot of volatility, yes, I will CS. I will talk about that. And then, some people say that when there is a lot of volatility, you can use a 2 tick increment. I personally prefer a 1 tick increment unless the volatility is very, very high, which is not right now. So I always use a 1 tick increment on my market profile chart. So each letter is going to be a 1 tick, right? That's how I like to do it. So a couple things here to talk about. So the first thing I'm going to talk about is the trade I made on the live commentary, which I suppose is what most of you want to hear first. On the rotation earlier today here on the ELO, right? So first I'm going to show you, a couple of things of what I'm looking at, right? So I'm going to explain what my levels are, because the levels are important into, the analysis I used into identifying the Trumpet sellers and the rotation back up, right? So as always, I'm using the previous day regular trading hours references, right? These levels are references, and they are not magic levels. They are pretty simple levels. They are references from the previous regular trading hour sessions. Remember that the way I use a market profile, I chop up in between the regular trading hour sessions when the stocks that are inside the index trade, right, which is New York time 9:30 to 4 p.m., right? And then the overnight trading until the next morning, which will be the Globex session, right? So the yellow is a Globex session for Monday night and, early morning on Tuesday. And then we have Monday's regular trading hour session right here. I'm trying to make this as big as possible so it's as easy as to understand as possible. So on Monday session, right, we have a P-shaped profile, which we have explained before, which the market opens, rallies, and then balances for the rest of the day, right? I made a trade yesterday. Late in the day, I'm gonna talk about it after this one. So briefly, I'm just using the references from Monday, the high, the low, right? The value area low and the value area high, and the close. Remember, this is everything from this session is from the regular trading hour session on Monday. Now, I'm carrying some information forward from Monday into Tuesday. The only information I'm carrying here is this B period low was a weak low because at the time it was made, it was exactly at the Friday regular trading hours high, right? So the market rallied higher, and on B period, the low was at a mechanical reference on Friday's high, right? Now, that mechanical reference is already being traded through, so we are not longer focusing on it. But I had early morning today, I had a focus on it, that this was a mechanical low, and it's a target, right? It's a magnet for getting traded through again. Really low volume there, 167, 150 contracts, low volume area with a mechanical low right there, right? So as we know, P-shaped profiles indicate that shorts are the ones fueling the rally higher, right? All of this buying is made by shorts that are forced into closing their positions because the market is moving on them. They close their positions. Once they are done covering, the market gets weaker. Short covering weakens the market. Now, as I'm carrying that information forward, I know the market is weak. I know the buying is a buying that is very weak also because the high is a non-excess high, right? That means that the buyers are exhausted, right? You can see the high on Monday. It's a non-excess high, unlike today's high, which has a lot of excess, right? You see all the single prints. So I know the buyers are exhausted. I know the shorts have covered, which weakens the market. And I know that the big period low is a mechanical low and it's a magnet. So early morning today, I was away from the screen. I was at the gym early in the morning. But when I came back, I saw we were developing a trend day down, right? Now, this is a very difficult trade to make. The long here I took it the long at 86 and I got out at 94.75 right here. And the reason it's a very difficult trade to make is because the day is developing a trend day down, right? Why do I mean by a trend day down? You can see how all of the periods are one time framing lower. Each period has a lower low than the previous period and a lower high, right? So C period has a lower low, lower high, also D period, B period, and E period. So the reason I made this trade is because the market was going lower for the whole morning, right? And if we were gonna have, if the trend day lower was gonna continue, right? You wanted to see acceptance below 85, right? 85 and 83 area are very important, are one of my levels that come from a larger balance zone from way back. This big white box here, it's kind of difficult to see in this chart, but is the balance high, right? So I'm looking at that level as a support or as an acceptance area. So the next thing for the market to do was for this area to have some acceleration, and then we could have started to come lower into 60s, right? Below 85s and 83s. Probably the next target was the previous day low, which was a Monday low, and then 60s, right? 63. So as I was watching the tape on the DOM, I saw, there wasn't much follow through here, and we had single prints in D period, right? So just for the fact that we were getting no follow through, and also the internals, let me show you the internals. So the internals were, they weren't negative, right? I mean, they were red, but the ratio wasn't even 2-to-1 negative, right? It was always around 1.5 negative, and it was never 2-to-1 negative. Nasdaq was green all along. The ticks weren't, too negative, and overall the internals didn't indicate, nothing out of the usual on the downside. There weren't like too negative for me to believe that, the trend day, there was no confirmation on the internals for the trend day down, right? That's what I was thinking at the time. The internals weren't indicating, confirmation on the trend day down. Remember that in my trading, I do not use, a single data point into which I say, this is black or white. I see a lot of different data points that help me form my market view at the time I do the live commentary, right? So I was looking at 85, and I was looking at 83, and there was no follow through here. The trend day down had, it checked all the boxes, right? One time framing down on all periods since the open, and single prints, right? Just for the simple fact that, I just didn't see any type of continuation on the downside, right? We were going down all day, where at least until we made the rotation, right? So we were going straight down, but there was no acceleration. The tempo was off. The price action wasn't leading me to believe that there was going to be more selling, right? The selling was very passive. Price was moving lower very slowly, right? It kind of moved lower, then it, paralyzed for a bit. It didn't move anywhere, then made new lows, then, kind of stopped, then made new lows. There wasn't that, back and forth that you usually see. Also, one of the main things is that although we had a trend day lower, you can see the size of the range in B, C periods, right? We're very small, right? And also D period and E period, there weren't, too big for me, just the structure of how B, C, and D period, you can see there was a 4 wide point of control up here, right? We weren't anywhere near the Monday low, right? So I just didn't see much follow through. It was as simple as that. I really did not see any type of follow through at the lows. I saw the excess low being made on E period. This is a beautiful excess low. You can see the taper here. Our support levels are 85 and 83, right? And you can see just the beautiful taper of contracts, right? The volume soaks up beautifully, meaning that the activity is not bringing in more participants as the price is going lower, right? Because somebody just asked, can you explain Trumpet traders? How do you identify Trumpet traders, right? So something I want to state and be very clear is that I have no idea how to identify when people are buying in the market or selling in the market, right? I think that's something very difficult to do. In my opinion, nobody can do it. Nobody can tell when there is big people buying or big people selling, right? Because the market doesn't work like that, right? The only thing you can see very clearly here in the market profile, in the footprint charts, in whatever type of order flow tool you use, is what prices are bringing in more participants, right? And by participants, I just mean volume, right? Because all these numbers you see here, all the volume you see here is, at the end of the day, it's that is being done by other human beings or other market participants, algorithms, whatever. Algos are just, a machine that is programmed by people, right? By people have agendas, right? So the only difference between people and algorithms is that, instead of doing it manually, they will tell the algorithm, I don't want to buy or sell anything above 94, and the algo will just go, straight to the level. For example, here at 97.50, you can see how we have a double top, right? Very mechanical, right? Exactly at the volume point of control of the day, right? So that's kind of like, algo activity, something that's very mechanical. But what I mean by this is that you cannot tell if, at these lows, right? 85s, when we made the lows at 80, 84s, 83s, you cannot tell if, somebody's down there buying, right? Because, yeah, somebody's down there buying, but there's also somebody down there selling, right? So the only thing you can, kind of see, watch, predict, whatever you want to call it, is if there is more activity being done at lower levels, right? And what I saw is that, market is going lower. So what does the market want to do? Go lower. Is it doing a good job at going lower, right? It's not, because if it was doing a good job at going lower, then these support levels at 85 and 83s will have chopped around more, developed more volume, right? Which means more market participants are interested in doing business at these lower prices. And then maybe we will have broken lower and explored. Everything is price exploration, right? So they explore lower, they explore higher. So what happened, what I saw, what I sensed, what I was looking at is the market sold off, right? We didn't have that short covering bid we had yesterday, right? So the market went lower. Exactly, volume is key. So the market went lower and it got to a support level, right? So when it gets to the support level at 85, what are people doing, right? Because who is in control? Shorts are in control, right? Because they have been selling the market all day. What do the shorts do once they get at 85, right? What do? They back away because there is no, they stop doing activity at those levels, right? They have been selling 97s, 96s, 95, 94, 93, 92. They break 90, they go below 90, 89, 88, 87, 86. Volume starts to soak up, and exactly below 85, the volume just drops dead. You can see it's colored red, right? Which means, color coded is the lowest volume area on the profile. So exactly, the activity dried up. And whose activity is that? who is bringing the market lower? The sellers, right? The shorts. So what happens is that this market this market is driven by emotions, right? So when people see that the market is going lower, there's a ton of people who want to get in the bandwagon because they feel, if you look at a monthly chart or a daily chart or a longer time frame chart, yeah, we're at the edge, we're very near the all-time high, and there's always going to be people who want to short because they think the market is too high, right? So whenever they see the market starts to liquidate a bit, because this wasn't a huge sell-off, I mean this was just some liquidation, right? There's a lot of people who jump in and short this market, right? And those trapped shorts, and I talk about trapped shorts because obviously there's people who short at bad trade locations. They start to short, they say, below 90. They start to short below 90. And all of that people who are short, they got to get out of their position because the market, there is nobody who's pushing prices lower anymore, right? When you short, when you sell 89, you believe somebody's going to be willing to sell 83, right? So but when you sell, you think there's going to be somebody who's going to sell even lower, right? Because you want the market to go lower. So because there's nobody else, there's no activity being brought in below 85, all of the people who are short at bad trade location start to get squeezed out, right? Once the activity on the downside dries up and the market starts to find some balance and go higher, it does go higher very fast, right? And this move up was kind of violent, it was a very fast move. From the E low to the F high, which is more than half of the day's range, it happened quite fast, right? It happened faster than what we did going lower, right? And those fast moves happen because there's people who are offside and they want to get out of their position as fast as possible, right? So it was a great trade, definitely structural trade, because I was leaning on this E period low structure, the weak structure that we had higher here, which was the D single prints, right? We also have a D period weak high, which I didn't write on the Discord, this D period high, because I just saw it right now. I actually just identified it. I hadn't seen it before, but right now that I'm looking at it, this D period high is a weak high because it's exactly at the close, right? We've talked about that a lot. It's a mechanical reference. And these F and G period are also very weak, okay? So this area on D period and F and G period, this is a great target, 98 and 99 is a great target for today, especially right now. We have tested, H period has tested the lows, E period excess has not been breached. So we might have another long opportunity here on around 89s for a rotation back to 98s, right? So this is a balanced day. Do not be confused. This is a balanced day. We're inside the previous day range. We're inside Monday's range. We're outside value, just below value for Monday. And our value relative to yesterday is overlapping to lower, okay? So here is Raku. Thanks for reminding me about this question. So what do you think about the statement high probability trades tend to occur later in the day market profile? Well, personally, Raku, I prefer trades that are done, at least 1 hour after the market open, right? The first hour of the market open, in my opinion, do not have enough information for me, right? But it's a personal preference, because as you can see, my trades take a little bit more time to develop than other traders that use other trading techniques. But that's just personal preference, and everybody has a different trading style, right? For me, in my opinion, and for what works for me, I have found that trading later in the day, at least 1 hour after the open, and even trading the close. I trade the close, sometimes. Yesterday I traded the close. I shorted the close yesterday, and it was a great trade. But it's a personal preference. I prefer to trade not necessarily later in the day, but I do like to have some time, to watch the market without doing anything, because that's how I collect data, right? This D period high, the E period excess, sort of those things, they only happen, once in the day, right? The low of the day only happens one time in a day, right? The high of the day only happens one time in a day, right? So you cannot be taking, the trade I took, that rotation higher, maybe it only happens once in the day, right? And you have to wait for it. Sometimes it happens later in the day, sometimes it happens earlier in the day, right? Sometimes it happens off the open and you miss the trade. So I think you have asked me this before, and it's the same response, right? It's not the time of the day, but it's how much time you need for the market to set up in a way that you feel comfortable trading it, right? Sometimes that can happen within 1 hour. Sometimes that can happen within 2 hours. Sometimes it happens until the close, right? Or until the last, hour and a half. The last hour and a half is a great time, in my opinion, because there's a lot of activity. There's a lot of volatility, right? It's difficult, it's risky, but that's the point of trading, right? If there's no risk, controlled risk, there's no opportunity. If you don't risk anything, if you don't have any type of controlled risk, you're not going to have any opportunity, right? You have to risk something. There has to be movement for you to do something, right? So exactly, Adrian said it right. You want a lot of market generated information to perform your trade. Something that Jim Dalton says a lot is to wait for the trade to come to you. And this is a great, it's all about, you need time to understand this stuff, right? Because after, a while trading, you're going to get to a level, or you probably already are at a level where where the market is moving, right? You can draw, some trend lines, you can draw some support levels, you have a couple of indicators, and where the market is going to move next, right? The trend is up, or the trend is down, or you have a pivot level, or whatever you have, right? But knowing what the market is doing or where it's going to move next, it does not mean you have a trade opportunity, right? Because in order for you to have a trade opportunity, you have to feel comfortable with the trade that you're about to execute, because technical analysis or your method or your system is, it only helps you identify the market conditions, but 80% of the work and the secret is the execution of the trade, right? The moment you enter the trade, where you place your stop, where you place your target, how you manage the trade once you're inside the trade, how you manage it, how you move your target, how you move your stop loss, where do you exit the trade, why do you exit the trade early, or why do you hold the trade for a little longer? That's the secret, right? So once you identify your market conditions, right, as I always explain, you look at the low, you look at the mechanical references, you look at the value, you look at where the price is relative to the previous day, and the tempo, the activity, right? Once you have all of that identified, then you wait for the trade to come to you, right? Once you have everything identified, then you patiently wait for the market to come into a position or a price in which you intuitively say, okay, this is a great price to enter right now, and you don't hesitate into doing it, right? If you're out there looking for a trade, the opposite of waiting for the trade to come to you is for you to be looking for a trade, right? And if you're looking for a trade, you're probably going to find one. Is it going to be a good one? Probably not. Are you going to find a trade? You're going to find a trade for sure, right? So if you're looking for trades, if it's, the market opened and it's been 1 hour and you made 4 or 5 trades, the odds are you're not trading correctly, right? You're looking for trades, you're looking to make, fast money, and you're not, relaxed, and you're not waiting for the trade to come to you. And that's a horrible loop to be in, because you made 5 trades, you lose money, then you're not going to be focused for the rest of the day. You're going to have no patience. The next, you're going to go to sleep, you're going to wake up, and the next day you're going to do exactly the same you did yesterday, because you're still looking to find looking for a trade, right? And you're looking for trades because you want to make money, right? And that's not the way to grow an account, right? The way to do it is to be very relaxed, taking high probability trades when the trade is there, right? If there is nothing to be done, the best thing to do is to do nothing, right? Doing nothing is something you have to learn if you want to be a professional trader. Doing nothing is a big part of trading profitably, right? If you want to be a profitable trader, you have to learn to do nothing, right? For example, right now, I just showed you, I identified, the D period high, the F and G mechanical highs. I have a support level here at 89. And I have identified, and I said, there might be a long here, right? I didn't take the long because although I have identified the market information, I do not feel comfortable with that trade, right? It's not I don't feel as comfortable as the trade I took earlier in the morning, right? But if I'm looking for trades, then I'm gonna find a trade. I could go ahead and find a trade right now, right? So going back to what Rahu asked, and he said, what's the better time to trade? It's not about 1 p.m. or 11 a.m. It's not about that. It's about being able to gather enough information from the market and feel comfortable and wait for the trade to come to you, right? I can take a couple more questions if you guys are interested in doing more questions. Well, an announcement I have is we're opening the new community, which is going to be a paid community, and it's going to be open starting next Monday. This Discord server is still going to be open, and I'm going to still post here occasionally, but because we already have a couple of people in our new server where I do live commentary for the whole day, and we do Zoom sessions twice in the morning and once in the afternoon, 2 days a week. I'm inviting everybody who is in this room, in this server, to join us in the new server. So because of all of you guys are sort of founding members, because you have been with me, for a long time, you guys are getting a 50% discount of the monthly fee. So if anybody's interested, I'll send Adrian's email. Adrian is the guy who I've been mentoring for 2 years. He's also a trader. He trades with the Market Profile, and he's the guy who's helping me build this community, because I really, really, really enjoy explaining everything about the Market Profile. And I've seen a lot of people who are in this room that, are interested in learning a lot more. And that's why I decided to actually go ahead and make this more professional and, obviously making it a paid community. So I'll be sending Adrian's email, so you guys can send him an email to enter the community. And as always, Discord is open. You guys can ask whatever you want. And see you guys. Great session today. Hope this helped. Hope it was clear. And this is being recorded, so I will upload this into YouTube. So thank you guys, and see you soon. I only look at Market Profile. I don't look at footprints. And the membership is $50 but for everybody here, it's 50% off, because you guys are, founding members. So it'll be $25 for whoever is on, only for the people who are on this server. So thank you guys. See you soon.